You're listening to the Limitless Wealth Method podcast. Smart ideas, real strategies, and candid conversations for business leaders. Here's your host, Jason Hilliard.
What's up, everyone? This is Jason Hilliard. Welcome to the Limitless Wealth Method podcast, my effort to share the ideas, strategies, and insights that help entrepreneurs, executives, and investors build wealth and live without limits. Every week, I'm pulling back the curtain on money, leadership, lifestyle, fitness, mindset, and emerging tech. Basically, anything that can help you perform at your highest level. So if you're getting value from this, it would mean the world to me if you would subscribe on your favorite platform, watch episodes on YouTube, and share it with just one person in your network who'd get something out of it. My goal is simple: to help you grow your wealth and your life one episode at a time. Let's get into it. Artificial intelligence isn't just another tech story. It's an economic event. It's the next industrial revolution unfolding in real time. Over the next decade, AI could add trillions in global output, but it will also test the social contract in ways we've never seen. It's going to change what we do, how we earn, and who wins. Today, we're unpacking how AI is already reshaping the U.S. economy, from the corporate boardroom to the stock market, to your own daily decisions, and how you can build your personal AI playbook to thrive through it all. So, why does this matter to you? Before we dive into the economics and the tech, let me tell you why you should care. AI obviously is going to change three things in your world. First, how you compete. Your rivals are already using it to move faster and cheaper. If you're not experimenting, you're falling behind. Second, how you lead. Your team's skill set is about to shift, whether you're ready or not. The people who learn to work with AI will replace the people who don't. And third, how you build wealth. The next decade will reward people who understand leverage, not just effort. AI is the ultimate leverage tool if you know how to use it. This isn't about being a tech expert. I'm certainly not a tech expert. It's about being strategically aware. So let's break down what's happening and what you need to do about it. Let's start at the very top. The biggest corporations in America aren't just adopting AI, they're restructuring around it. Amazon recently announced about 14,000 corporate layoffs. And the CEO of Amazon, Andy Jassy, said it plainly, and I quote, "We'll need fewer people doing some of the jobs being done today and more doing other types of jobs." In addition, Salesforce saved $100 million a year by using AI to handle customer support in early sales. Additionally, Microsoft says AI now writes 30% of code on some projects and saved $500 million in call center productivity. Corporate America has reached a new equilibrium. If your competitor uses AI to widen margins and you don't, you pretty much lose. The new rule of capitalism is simple: cut first, ask questions later. This is really phase one of the AI economy: profit-driven efficiency. It's deflationary for labor, inflationary for margins, and it's changing the DNA of every large company in the world. Now, here's the weird part. We still see strong labor data, although recent labor data has shown some softening. There's millions of job openings, but many of those jobs, they don't actually exist, believe it or not. A huge number of those postings are considered phantom roles. They're kept online for optics. They're not necessarily hiring. It's a quiet contraction. It's where the data says growth, but the real economy says shrink. We're watching the start of creative destruction, where AI quietly is replacing labor before the statistics catch up. The headlines still say tight job market, but beneath the surface, automation is already doing the work. Here's the macro picture. Even a 1% productivity gain from, let's say, 2 to 3% adds trillions in value. That's really why the S&P 500 has rallied over around 30% since the spring and added nearly 16 trillion in market cap. Meanwhile, big tech is spending hundreds of billions on AI infrastructure. They're building data centers, GPUs, and power grids. It's boosting GDP and stock prices. But here's the catch. Most of these projects aren't profitable yet. The economics don't work. cloud providers are subsidizing usage to win market share, hoping profitability catches up later down the line. It's the Amazon playbook from the early 2000s. You lose money today, you dominate tomorrow. This is a strategic boom, not a cash flow boom. And strategic booms don't end softly. They consolidate. The market knows it's in a bubble. We know we're in a bubble. It just doesn't care yet. So unprofitable tech names, they're leading again. It's a classic late cycle tell. If you remember back in the late 90s and early 2000s, Stan Druckenmiller, which he was one of the best investors of all time, once shorted the dot-com bubble. He lost $600 million in a few weeks and took a sabbatical. Even the best can't time mania, but understanding why it happens, that's where you build wealth. AI's productivity boom is definitely real. The question is how long the euphoria lasts before the bill comes due. So let's break this down to our world, or my world, which is finance, because AI isn't just changing tech companies, it's rewiring how capital flows and how portfolios are built and how markets actually think. For decades, research meant analysts are reading reports and earnings transcripts in Fed minutes. Now, algorithms do that in seconds across thousands of sources. AI systems are parsing every public statement from the Fed speeches to CEO interviews, detecting simple shifts in tone or confidence, and even deception patterns. Hedge funds use large language models to spot subtle changes, like when a CFO's wording shifts from strong pipeline to seeing early signs of softness. Those really small linguistic cues become data, and data becomes positioning. But it's not just about what executives say anymore. It's about what everyone is saying. AI now reads the crowd. There are algorithms parsing Reddit, X, and even private forums, looking for the early formation of themes that move markets. So when millions of posts suddenly start clustering around a single idea, maybe it's AI chip shortage or soft landing or rate cuts coming, these systems flag it. That's what some funds call narrative liquidity. It's the moment a story becomes a tradable asset. So let me give you a real world example. Let's talk about the meme stock phenomenon and how that is an example of narrative liquidity. So as everyone may remember, when Roaring Kitty or Keith Gill started posting about GameStop on Reddit's Wall Street bots and AI sentiment algorithms at hedge funds and trading desks were tracking it in real time. They weren't just watching GameStop, they were watching the velocity of conversation, how fast posts were multiplying, how sentiment was shifting from skeptical to euphoric, and how that energy was spilling into other tickers like AMC. By the time AMC became a household name in early 2021, sophisticated quant funds had already detected the pattern weeks earlier. They saw millions of Reddit posts clustering out around phrases like short squeeze, diamond hands, and apes together strong. AI flagged the narrative formation, and capital started flowing towards AMC before the mainstream media even caught on. Some funds rode the wave on the way up. Others shorted it at the peak. But the key is this: they weren't guessing. They were reading the crowd with machines. That's narrative liquidity in action. When a story reaches a critical mass online, it becomes a self-fulfilling prophecy in the market. Because once sentiment reaches that tipping point, capital flows towards it. Whether the fundamentals justify it or not is irrelevant. It's the new form of crowd intelligence, machines mapping emotion at scale. AI sentiment engines now quantify the collective psychology of the market, the same way credit models quantify risk. They can see when optimism or fear is accelerating across digital channels before it shows up in price action. In the past, we watched economic data to predict sentiment. Today, we watch sentiment to predict economic data. That's how much the feedback loop has flipped. And this shift isn't just about information, it's about execution. Portfolio management is moving from static to adaptive, from passive to active. AI can track thousands of cross-asset relationships, growth, inflation, volatility, liquidity in real time. So instead of quarterly rebalances, portfolios can now evolve daily, even hourly as the data shifts. The model learns what's working and what's breaking faster than any human team could. At my firm, we already blend fundamental analysis with quantitative modeling to understand macro trends. AI just adds another dimension, speed and pattern recognition, letting us test thousands of scenarios in seconds and identifying emerging risk before it hits the surface. The edge in the next decade won't come from predicting the future. It'll come from adapting to it faster than everyone else, getting into positions or getting out of positions before the crowd. The next frontier isn't the market, it's the mind. So AI can now analyze how investors actually behave, not what they say on a risk questionnaire. It can study client communications, decision patterns, and reactions to volatility. It can help advisors identify when emotion, not logic, is driving a choice. That's a big deal for fiduciary firms because if AI can help us recognize when a client's behavior might undermine their plan, we can step in with clarity, not hindsight. AI doesn't just model markets, it models humans, and that's what makes it powerful. In the advisory world, AI isn't just replacing advisors, it's amplifying them. It's giving firms the ability to generate customized planning models, tax scenarios, and estate frameworks instantly. You can feed in real data from a client's portfolio, their 1031 DSTs, their IRAs, their real estate holdings, and model dozens of paths in seconds. The result is that you have more precision, more personalization, and less guesswork. AI gives advisors the power to be faster and more personal at the same time. It turns data into dialogue. Like every revolution, there will be winners and losers. The big custodians, the Schwabs, the Fidelities, the Morgan Stanleys, they're building AI ecosystems around their client data. But boutique RIAs like ours that embrace AI intelligently will compete head to head with those giants. The advisors who resist will fade away. The ones who evolve will thrive. Now, AI won't eliminate advisors. It'll eliminate the average advisor. Now, let's turn the lens inward. How do you use AI to create leverage in your life, to scale your time, your thinking, and your impact? Well, step one, you scale your decision-making capacity, right? AI compresses hours of research into minutes. Use it to summarize reports, maybe transcribe meetings, and maybe surface some insights. Build your second brain. Let AI organize notes, tasks, and metrics so you can focus on judgment. Run what-if scenarios for pricing, budgeting, strategy before you act. You don't get paid to collect data. You get paid to interpret it. Step two, you have to automate the repetitive, protect the creative. What do I mean by that? Well, AI should remove friction, not identity. You have to automate your process, not your purpose. So automate your scheduling, your follow-ups, and data entry. Let AI draft maybe the first version of an email, proposal, or report, and then you shape the message. Use it to handle compliance summaries or meeting recaps. You'll know you're using AI right when it makes you more human, not less. And step three, you build an AI augmented team. Identify the 80% of each role that's repetitive, and then you use AI for that. So you free your people to focus on creativity, relationships, and innovation. You are encouraging collaboration between human intuition and AI output. Your job as a leader is to turn every employee into a strategist. AI is that bridge that makes that possible. Step four, you optimize your personal operating system. So you use AI as your daily reflection partner. Summarize meetings, track what drained or energized you. You really build dashboards that measure not just your schedule, but your energy, priorities, and time allocation. Maybe you ask it, where am I spending time that doesn't generate value? Think of it as an operating system for your life, one that learns how you think and helps you think better. In step five, you want to train your judgment, not just your tools. The most valuable thing AI can do for you isn't work, it's reflection. Use AI as a devil's advocate. We use it as a devil's advocate for everything that we do. Have it critique your strategy, rewrite your messaging from a client's perspective, or stress test your assumption, which is a big one for us. Feed it your quarterly goals and ask, if I were an algorithm, where would I see inefficiency? The winners of the AI era won't have the best tools. They'll just be able to ask the smartest questions. And you want to keep step 6, keep the human edge. As machines get smarter, your humanity becomes your competitive edge. Double down on your empathy or your creativity, storytelling, and leadership. Use AI to enhance your insight, not replace it. Remember, people don't buy efficiency, they buy trust. And if AI is the engine, you're the steering wheel. The goal isn't to outthink the machine, it's to direct it towards meaning. Before we wrap, I want to talk directly to the people leading teams and making decisions every day, the founders, the executives, the operators. Because here's the truth, AI isn't optional anymore. It's not a tech story, it's a leadership story. And the gap between companies that get this right and companies that don't, it's widening fast. Most executives I talk to ask the wrong question. They ask, should we be using AI? The real question is, what's the cost of not using it? Because while you're debating, your competitor is already moving. They're cutting costs, they're speeding up decisions, and they're scaling output without scaling headcount. AI doesn't really care if you're ready, the market does. So let's talk about 3 things you need or could do this quarter. Number 1, my suggestion is to run one AI experiment. Pick one workflow or one process or one decision that takes too long or costs too much. Let me give you an example. A mid-size accounting firm I know was spending about 15 hours a week on manually categorizing client expenses for tax prep. They tested an AI tool that could read receipts and invoices, categorize them, and flag anomalies. And it cut that 15 hours down to 2 and freed up their team to focus on tax strategy and client calls. That's the kind of experiment you need to run. You automate it, you test it, and then you measure it. You don't need a strategy deck. You need proof, because transformation doesn't just start with the plan, it starts with a pilot. Number 2, audit your data. AI is only as good as the data you feed it. And most companies are sitting on messy, siloed, or incomplete data. If you can't trust your data, you can't trust your AI. Here's another example. A wealth management firm wanted to use AI to generate personalized client reports, but their client data was scattered across 3 different systems. They had a CRM, our portfolio management software, and spreadsheets. They spent 1 quarter cleaning and consolidating it. Once they did, they could generate custom reports in minutes instead of days, and their clients noticed the difference. So start cleaning your data now, organize it, and own it, because in 5 years, your data foundation will be worth more than your brand. Number 3, train your people, not just your tools. AI definitively eliminates tasks. It doesn't eliminate purpose. But if you don't teach your team how to work with AI, someone else will teach AI how to work without them. So the future belongs to augmented teams, humans and AI, humans who use the machines to think faster, decide smarter, and create more value. Your job as a leader is to build that capability before the market forces you to. The real risk isn't AI, it's hesitation. Look, I get it. AI feels overwhelming. The pace is relentless. Everybody's talking about it loudly, but every revolution rewards the people who move first, not perfectly, but decisively. You don't need to have it all figured out. I certainly don't. You just need to start, because the companies that thrive in the next decade won't be the ones with the best technology. They'll be the ones with the best judgment about how to use it. We're living through the fastest technological shift in history. AI won't destroy opportunity, it'll redefine it. The question is, will you let it replace you, or will you let it extend you? Automate the repetitive, augment the strategic, and optimize your time. Technology doesn't create wealth. People who understand technology do. Thanks for listening to the Limitless Wealth Method podcast, where ideas shape the way entrepreneurs and executives build their future. If today's episode sparks something for you, please share it with someone who's building their own playbook. And until next time, think big, stay curious, and keep building a life that's truly without limits. Thanks.